Morning traders, Paul here with GammaEdge. Today is Thursday, the 2nd of March. Let's get going. Pause your players here, read to the very bottom. If you agree, hit that play button. Summary for today. Market models, we have a short-term continuation down day. So this is 2 days now that we have the cumulative tick closing less than the previous close, and we have a railroad track down the day 2 also. When we see these, we tend to play the downside, and today is no exception, so be wary of any reversals, but also this is heavily back-tested and a very strong signal, and the railroad track, especially with a confirmation of the CT close, can really add some incremental bullets to your gun there. Long term, the ribbon is inverted and is bearishly pointing down. This is almost across the board now on all of them except the IWM. IWM is being very, very resilient. So the small caps, as indicated by the Russell 2000, is bucking the trend, but everything else is pretty weak to downside. We are long in the tooth. Even though we had one day that we did pop up, we are mindful of a bullish reversal because as you have a sequence of down days, people start taking their profits, and that can lend us to moving north. We have a market breadth indicator. It's the 52-week new high, new lows. We barely failed yesterday at the new lows, slightly larger than the new highs. So take this as, again, transitory. We started off in January with just solid day-over-day new highs outpacing new lows. We've had a few days in February where that reversed, and now we have in March, we have the first slight outpacing to the downside. Two goalposts, plus gamma exposure, which is the call-dominated exposure, remains at 4,200, and the left goalpost, which is the put-dominated gamma exposure, is 3,900. These are important. A lot of transition occurs if we go above or below these levels. This is in the SPX Combo Complex, which is the AM settled plus the PM settled, and really do represent where the guardrails are on the highway here. We do see OTM puts continually being added here, so the bears are firmly in control and they are playing the downside. We're not seeing any form of out-of-the-money call speculation going in that would reverse any of the in-the-money deltas on the upside. Until we see that, there's no path to go north. So we are definitely playing the downside on any rips that we see here. Charm from today and looking into tomorrow and next week, we did put a Twitter thread out there, so I would urge everyone to go take a look at that. But today, Charm indicates that 3850 and 3900 are the relevant strikes to slightly positive flows, as long as we can remain above those levels. The 4000 strike is going to contribute to the downward flows. Gamma, which is a function of price, of course, suggests that the quarter levels from 39.75 on down, at least through 3900 and possibly into 38.75, are important. So just pay attention. Depending on where spot price is throughout the day, will accentuate those quarter levels. For the zero DTE crowd who track all of this, we want you to be mindful of tomorrow's expiry. We are seeing the 3850 and the 3900s really appear and become relevant. The 4000 strike, of course, as I just said, also looms large. Failure to take the 4000 and 4005 transitory area suggests a downside reversal, and play that accordingly. And a failure to break below the 3900 today suggests that we could bounce upwards. Just remember, though, the 39.75 quarter levels all the way on down to about 38.75. So if we do push below 3900, it could be temporary as we get some sweeps to take out those stops. We don't see anything below the 38.75 level, so I would give it a little bit of room if we do break below, because we do see that 38.50 down below, which is looming large. Want everyone to pay attention to the SPY. We don't normally cover the SPY here. Taylor covers that. But the SPY-GEX ratio, you can run this command in the Discord. I think it'll tell you some interesting things. And go look at the Fish Pond channel within the Discord also. JB updated some things, and there might be some opportunities to be alerted to. For the bulls to have any chance here, we have to take the 39.65 strike. If we don't take 39.65 into the close, we can't see any real easy way to make a path north. If we do take that, and this isn't an intraday move, this is a strong push upward. We want to see the cumulative tick. We want to see the filtered cumulative tick start pushing us up there, start seeing some institutional buying, not a drift upward. If we do get some of that push, the next line that we want to see taken is that 4,000, 4,005. If we don't get those, we are definitely sellers on these rips. The cumulative tick model, you can see clearly it inverted last week. It's clearly down, and as far as the ribbon's concerned, very parallel lines. Downward. We're in a downtrend. That should be no surprise to folks. If we take a look at the short term, you can see this. We had 1 day of a bounce, and clearly now we just completed day 2. Again, we normally short or take contra positions in the minus 2x ETFs when this happens, and that would have rewarded you well. If you take these signals and follow these signals as they occur, and as we present them, they can be beneficial. Don't get out over your skis. Don't size too big, of course. But certainly we've been taking these, and they work out well. We have those short-term moving averages that you saw also, and this actually tests better. It's a little more confirmation. And you can see here that we just completed day 2 again. So when you take a look at this, this is the composite view, and then you can disassemble into each of the constituent views, and would urge everyone to learn how to do that. It can really have an impactful outcome on your trading and your positioning. When we take a look at the different gamma levels, SPX PM settled here on the left, combo here on the right. You can see that colored some things red. Overall, we are slightly weaker than Wednesday, so we are seeing more put dominance go in, negative deltas on both sides, and that is obviously, that's bearish. We did see a slight move up from 40.25 to 40.30 in the PM complex. That actually is weakly bullish. The levels aren't very strong, but nevertheless, it does look like there is some positioning to the upside. It's just not anywhere near as strong as it has to be. And then for whatever reason, call open interest moved back up to 4,200. It had dropped to 4,000 yesterday, which was very weird. We checked the data a couple different times throughout the day, and it was down there. So just noise. I mean, there's nothing to interpret there. Over on the combo side, no changes. Expected move, open, high, low, close, conservative values for the premium sellers that use this. We think the ranges are there. If you can get premium on a bounce and do something above this level, that's probably a very, very safe intraday play. And then to the downside, as we were saying, if you get a drop to 3,900 or even 38.75, we think this range here is probably pretty safe. PM settle complex. So this is the tradable complex, about 4 million contracts. The number is going up. Transition is dropped and is a little bit wider. Just be aware of that. Couple parking spots in there. You can see a sea of red below us. So the out of the money put speculators are clearly evident here to the north. Only a couple places where the call speculators are popping through. Everything else is negative. So the in the money puts still are controlling the conversation above us. Couple key levels, as I said, 3950, 3900 are relevant. You can see the 3850 sitting down here. So for the overall PM complex, it's bearish. I mean, there isn't anything really to say there. Taking a look at the charm, as I indicated, and as the tweet that we sent out indicates, you got this 4,000 strike for tomorrow, which is pretty important. You've also got this 3,900, which you can see is pretty important, and then just barely visible here on the projection down onto this plane. 3850, and you can see that right here. So depending on how we play today, it'll be very, very interesting for tomorrow too. You can go to this link here and interact with us if you so choose. Taking a look at the 0 DTE transition, fairly clean. We're just below it. This is what's coming off today. So we'd like to see puts come off. That's going to be net negative gamma here. So when we see this, if we have day over day over day of this, this is good. It means that the Bears have the potential to be weakened, but of course, if they continue to add, then it's all negated, and we've been seeing it being added by just the overall deltas going down in the overall structure. So 4,000, 3950, real key gamma levels for today. You can see that 3,900 is also in play, more so tomorrow, and then there's nothing below it for today. Take a look at tomorrow. So this is our crystal ball view into tomorrow. Very strong expiry. This is not normal for the non-OPEX week. So just pay attention to this. We have a lot of puts that are scheduled to come off tomorrow. That's why we have a lot of put-dominated gamma here. Very, very tight transition range. Again, this adds to that story that we absolutely have got to see the 4,000, 4,005. Now, the fact that this is an expiry, when we start seeing this kind of dominance come off and very clean structure, that's important. So we'll have to certainly pay attention to this. Here's those quarter levels for tomorrow, already evident in the expiry. So 39.75 all the way on down, 75, 38.75 and 38.50. So just pay attention to that. But again, the takeaway here is a very strong removal of put dominance tomorrow. So this might be the crack in the ice that the bulls need to see. We'll just have to wait and see how they respond. The combo complex, which is the AM and the PM settled above us, it's just basically a sea of red. So the in-the-money puts are dominating the conversation. A couple nodes to be aware of. That 39.65 is really, really important. We've got a delta transition right in there. We've got a gamma transition in there. These are low exposure hiding points. I would not be surprised at all if we pushed north, if we took this as a hiding spot in general. Now look at this. Look at these numbers here. Part of it is because COI, call open interest, and put open interest, which has been locked here and is largely illiquid, is now starting to rear its head. And we're getting some pretty significant levels all the way up through here. So just pay attention to this, that if we can take the 4,000, 4,005 range, we probably will start to move north, and we'll see the call speculators start coming in. They'll feel emboldened to do this, and we'll also see green start to appear. Now, on the downside, we were up at about 39.20, and we were seeing less put speculators come in. These are out of the money puts, right? So below the yellow line, which is the closing price, anything that is added as a put down here is an out of the money. We've been seeing this grow. The red has been growing, which means the out-of-the-money put speculators are in force, and they are dominating the in-the-money calls here. Now, there are calls. You can see them right here, but they're just being completely dominated by the short-dated out-of-the-money puts, and we're also seeing the ceiling of this get pushed down. When we see the ceiling of this getting pushed down, that's bearish. There's just no other way to interpret it. The out-of-the-money put speculators are there, they're present, and it's fairly close to spot price. So when you see that, don't fight these wins. If the price is going down, you can play off of levels, right? We always recommend playing off of levels, but don't just say you're going to go long when you've got something like this, because it's pretty clear that people are still piling in. And if I open puts, that's going to bring prices down. If I close those puts or start opening calls, we can also see that reversal. Last slide, 4,200 is the upside goalpost, 3,900 is the downside goalpost. You can see we're starting to see this emergence of these secondary lines. 39.50, which is where we closed yesterday. Of course, that's going to be very strong because spot price and gamma are interrelated. 41.50 to the upside. Now, that's partially because the 4,200 line has decreased a little bit. We've moved down, so everything up here is going to reduce because gamma is spot price sensitive. But the fact that the 41.50s are now starting to emerge is relative to this is that's something to pay attention to. But structurally, we've got a lot of repair work to do here. That 4,000, 4,005 strike is critically important. If we don't get above that, I'm a seller. And then, of course, at 39.65, as I discussed, we've got to clear that, get into this range, possibly get trapped in this range, which will be fine. Let the call speculators come up. And then slowly start seeing the put speculators get out of here, and that could break this 4,000, 4,005 boundary. But if we can't get above these two key levels, we're sellers here. So that's it for today. Come join us, GammaEdge.us. Upper right-hand corner of that page is a pricing link, click on that, fill out the blanks, come on in. 14-day free trial. When you sign up, you're going to get something from LaunchPass. There's a code in that email. Send that code to the LaunchPass bot, which will be part of the Discord. So if you're new to Discord, when you join Discord, it will add a friend automatically to you, the LaunchPass bot, and that will be send them a direct message of that code and you'll be in. Follow us on Twitter, GammaEdges with an S, and then here on YouTube. Two things. If you like today's content, let me know. Hit that like button, smash that like button, and that'll give me immediate feedback that I'm providing content that you find actionable. And then, of course, subscribe, because Taylor, myself, and Michael post videos so that you see what we're seeing. Yes, we know these are delayed. We are delaying these. All of these videos are made available to members before the open or the night prior. But this is just the content that we do post, and even though it's delayed, as it goes out to YouTube, you see what we see, and you actually have the benefit of seeing, did we get it right? So that's also important. So with that, I bid you farewell. Make it a great day. Control your risk, learn, and hope to see you in the Discord. Thanks, everyone.